Hey everyone, and welcome back to the channel where we dive deep into how to borrow stocks and the mechanics behind a potential short squeeze. Today, our spotlight shines on Global Interactive Technologies Inc., ticker GITS. This one has some truly unique characteristics that demand our attention. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's break down GITS. This company operates in the communication services sector, specifically internet content and information. Through its subsidiary GITS runs Faning, a digital fan engagement platform in South Korea supporting online fan communities and content interaction. With a market cap of just $5.05 million, GITS is a micro-cap stock. Show company logo/sector info. Recent price action shows GITS down -9.42% today. Over the last 5 days, it dipped -10.51%, and the last 30 days saw a -32.48% drop. Show chart with price action. Volume today was 44,003 shares, roughly 0.5x its 30-day average of 93,946 shares. What is cost to borrow and why it matters? So, what is cost to borrow, or CTB, and why is it vital for short squeeze potential? CTB is the annualized interest rate short sellers pay to borrow shares they sell, hoping to buy them back cheaper later. Think of it like paying rent on a property you don't own. Show animation, shareholder short seller broker market. A high CTB signals intense demand from short sellers, extremely limited share supply, or both. When this fee skyrockets, it becomes incredibly expensive to bet against the stock. Yes, these fees can easily exceed 100% annually. Imagine paying over 1% of the stock's value daily. This directly impacts short sellers' profits and piles on pressure to close positions. Why this stock is hard to borrow right now. Now specifically for GITS. This stock hit our hard to borrow screener due to its annualized cost to borrow fee, currently an astounding 932.3%. Highlight 932.3%. This makes GITS exceptionally expensive to short. Its estimated float is a relatively small 2.4 million shares. While available borrowable shares are unknown, a CTB this high strongly suggests supply is incredibly tight. Our internal composite squeeze score for GITS is 42.5 out of 100, indicating moderate potential, but certainly no guarantee. Squeeze mechanics explained. What happens when a stock like GITS, with its 932.3% CTB, starts to climb? That's the short squeeze. A squeeze occurs when a stock's price surges, forcing short sellers to buy back shares to stem losses or meet margin calls. This forced buying creates a feedback loop, driving the price even higher and forcing more shorts to cover. Chart animation, price up, shorts cover, price up more. For GITS, any significant upward movement would make that 932.3% CTB unbearable, intensifying pressure on shorts to close. But remember, a high CTB does not guarantee a squeeze. Short sellers might have strong conviction and be willing to pay the premium. Dilution risk check. One major hurdle for a squeeze is dilution. This is when a company issues new shares, increasing the total count and diluting existing shareholder value. New shares flood the market, satisfying demand from short covering, putting downward pressure on price, and negating the squeeze effect. For GITS, our checks found no recent dilutive SEC filings -1/-3/424B in the last 90 days, nor any recent reverse split. This is a positive for a potential squeeze scenario, as there's no immediate flood of new shares to absorb short covering. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. If you're watching GITS, here is what to monitor. Look for significant volume spikes, especially on green days, signaling buying pressure or short covering. Sustained positive price momentum is key, reversing its recent -32.48% 30-day downtrend. Further decreases in available shares to borrow would also heighten squeeze potential. And any shifts in that extreme 932.3% CTB. However, note GITS' current low relative volume of 0.5x average, which doesn't suggest strong buying pressure right now. Highlight volume bar on chart. In summary, Global Interactive Technologies Inc., GITS presents an intriguing profile with an exceptionally high 932.3% cost to borrow. While this signals immense pressure on shorts and tight supply, remember it doesn't guarantee a squeeze. Always conduct your own thorough research. If this breakdown was helpful, please smash that like button, subscribe for more unique hot to borrow insights, and tell us in the comments what stocks you want us to analyze next. Thanks for watching.